Hi guys, this is Craig, the options linebacker. This is the weekend report for Sunday, October 17th. I'm starting out with these two charts here, the Dow Industrials on the left-hand side, the transports on the right. The reason why we look at these two in conjunction is because these are the components of Dow theory. If the Dow components produce a product, the transports ship it, and if they're both heading in the same direction with the same wave structure, then that's a Dow theory confirmed uptrend. So you can see this clearly in the Dow Industrials that we're making higher highs, higher lows, and the same thing is happening with the transports here, higher highs, higher lows. The thing that we want to watch out for here is that we're coming up to the April highs in just a few points here, not only in the industrials but also the transports. So things may start to slow down here. Let's go to the S&P 500. We have the same posture going on here that we've talked about for a long time. This is going to be an extremely critical area, this little blue area here, because what happens there is if the price is able to get over and above that blue area, then we have a change of polarity on the monthly chart, and that's not something to be taken lightly. Right now we have a confirmed downtrend on the monthly chart. And you can still feel it that we're under the effect of that monthly downtrend because people are still scared to death that we're just going to go flying down here to retest those lows. It's still pervasive in the market psyche. Every time we have a down day, we think it's October 2008 again. And that's why it's so important that we stay objective with these things because the market has just been climbing the wall of worry here for the past 6 weeks. It's going to lead to a higher probability of that change of polarity. So again, we're in a current downtrend, lower low, lower high. However, now we have a higher low. So if there is a corresponding higher high that gets above S&P 1220, that's going to be significant because then that's a change of polarity. Now we're into the weekly chart. The problem here is that if it fails to get over and above 1220, then this could be the beginning of that lower high that starts the long trek back down to S&P 600. My own opinion is that this is not going to happen simply because of the fact that there was so much bad news through this whole corrective period that we had from the end of April all the way through the beginning of July. So that period there was our corrective period where we came down and tested that 38.2% retracement. And since then, we've made equal highs and a higher low and higher highs. So now we have a confirmed uptrend on the daily and weekly charts, and we're just waiting for that close above 1220, which is going to signal that we have now a confirmed monthly uptrend. So right now the bulls have the baton. They're backing bears up left and right, and it's up to them to make sure that this closes over 1220. Let's go down to the daily chart. What's happening in the short term? When is this going to reverse? Is this going to reverse? Well, you can see that we have a very strong level of support here at 1150. It wouldn't be surprising to see the price come back down to retest that breakout level and then rebound strongly from there. It would also make sense for us to see a pullback in the wave structure because this has just been one long wave that's just been crawling up the Bollinger Bands ever since really the beginning of September. We are starting to see bearish divergences show up on the MACDs. This is very common. We always see these on rallies going up, similar to what we saw back here. However, we're also starting to see this under the hood of the market with the NYSE advancing issues. So these are the number of stocks on the NYSE out of about 3,200 or so that are actually advancing for the day. And you can see that that number is starting to decrease day by day. So as we continue to make higher and higher prices, we have fewer number of stocks advancing on a daily basis. See this kind of divergence showing up at tops and at bottoms as well too. You could see that the last bottom, which was around the end of August and early September, featured a strong bullish divergence before it totally took off. Now, just looking at the daily chart of the S&P, you can see that we have still quite a bit of room before we're going to hit that S&P 1220 level. So just based on Friday's close, we still have another 45 points or so before we hit that level, which is still quite a bit of room. But as we look at the Dow, the transports and other charts like the NASDAQ, we can see that there's not a whole lot of room between where the price is now and previous April highs. So if stocks continue to go higher from here, we'll probably do so at a very glacial pace, very grinding pace, similar to what we've seen over the course of the last week. If it wants to accelerate, actually sometimes it can go faster if you drop first. So if we go back to like an 1150 level, if we drop very quickly down to that level and stoke up a lot more bearishness, then we'll see whether or not the market still has a very heavy hand of support underneath that level, and we may see a very quick rebound off of that. A lot of times the fastest way for a market to go higher is to actually take a step backward first and not only find new sets of bulls to come on board, but actually encourage new weekend bears to short. And as they continue to get bent backwards here, they create that short covering that helps fuel that second wave of the rally. Really, the bottom line that I see for the S&P 500 right now is I see 1150 holding as support for the short term. If that doesn't hold as support, there's really strong support down here at the 38.2% fib. So some of the indicators show me that a retracement is almost imminent due to some of the divergences that we're seeing. However, the market can do whatever it wants to. If it continues to go higher, it's not going to do so at a very quick pace. It's going to continue to grind higher until we start to see overhead resistance come into play, which is, as we said, going to come into play very soon in the Dow. That's all we have to talk about for now, folks. The market's been on a one-way trip really since the beginning of September, and it's just a question of who blinks first. Enjoy your weekend and this beautiful fall weather. We'll catch you next weekend. Take care, folks.